Welcome back to another video. I hope I can earn your guys' subscription. Today we're going over the top 5 Dividend King stocks. Let's get right into it. So first off, let's start off with a well-known company, Coca-Cola, or KO on the New York Stock Exchange. This is a consumer goods company. They mainly do beverages and soft drinks. The current LTM dividend yield, which is the average dividend yield over the past year, is at 3.26%, or about $1.60 in dividend payouts. The price right now is currently at $50.48. The X date is September 14th, which means if you buy the stock before September 14th, you are going to be able to get one of these dividend payouts. Now, they pay out quarterly, which means you're going to get 4 payments over the year, and they've been increasing their dividends over the past 57 years. They do have an attractive 3.25% dividend yield, as I said, which comes with a forward payout ratio of about 90.39%, which is on the higher side, but I wouldn't worry about it too much because it is a company that's growing very, very strongly, and it's everywhere around the world. So nothing to really worry about. They are really good at managing their company, so I wouldn't be too worried about it. They have a 3-year average annual dividend growth of about 3.5%, which means they're increasing their dividend by that. And yeah, I'm pretty happy with this company. I own some shares myself. Now, another reason this company is so great is because we are seeing some good growth. Over the past 5 years, we've seen 32.5% growth, including the COVID crash when we had in March. Most stocks dropped drastically, which has allowed us to be able to get many stocks for a discount price, such as Coca-Cola right now is going for $51.04. Right before COVID, it peaked at around about $60. So that's a great opportunity for most investors if you didn't buy right before the big crash. Getting into the nitty-gritty, the EPS is up by 5.3% over the past annualized 5 years. Revenue is down 4.1% annualized 5-year growth rate, and the annualized 5-year growth rate on cash flow is up by almost 3%. So we are seeing some growth in the money they have. They're not going in debt, which is great. Revenue is pretty flat. We're not really seeing any gain or any loss, maybe a little bit lost, but nothing really to worry about too much. And as you can see, the EPS has gone up, which is just beautiful and great to see. Next, we have Genuine Parts, or GPC, on the New York Stock Exchange, which is a services, so they sell auto parts. Big company when it comes to NASCAR. This stock is going for around 96.84. The X date was September 3rd, so missed out on it if you didn't buy it before then. The payout ratio is very low, which is something I love about this stock. It's at about 66.10%, and the LTM dividend is at 3.14%. So you're getting that amazing 3% dividend yield for that also amazing payout ratio of 66%. So there's a lot of room for that dividend yield to grow. Over the past 63 years, they've been consecutively increasing their dividends of about 5.38% over the past 3-year average annual dividend growth. Now, looking at the stock price over the past year, it is up by 6.42%, including the COVID crash. So you are still getting it at a discount at about $97, when pre-COVID we were peaking at about $105, $106, but you are still seeing that amazing growth. It's a very good, strong company with decent growth. Over the past 10 years, 121% growth. Over the past 5 years, 20% growth. So not crazy, but we are still seeing some very strong growth. Getting into the gritty nitty, we are seeing a GAAP EPS of negative 1.5%. Nothing to worry too much about because that's not insanely bad. Over the past 5 years, the growth rate of revenue is up by 4.8%, so that's great. We are seeing growth, as you can see, from 2017 to 2019. We've been seeing great growth overall, and cash flow is not negative, so that's always good to see, and it's been growing 0.8% annualized 5-year growth rate. Next, we have Cisco Corp, which is a food wholesaler. They have a bunch of food brands. Their LTM dividend is 2.6%, so not great, but it is a very good dividend yield. Now, on the higher side, for payout ratio, it's at 89.55%. The X date is October 1st, so buy it in the next 23 days and you will get that dividend payout. Now, it's not 50 years, but it's still considered Dividend King because 49 is pretty much 50 years. So yeah, it's been increasing its dividends for the past 49 years at a whopping 11% for the 3-year average annual dividend growth. So that's insane, amazing dividend growth. Coming into the actual price of the stock, now another great thing about the stock, as most of the stocks that I'm suggesting, and the reason why I picked most of these stocks is because we're seeing good growth, low payout ratio, and great dividend yields. So as you can see, over the past 5 years, 51.98%, including the COVID crash. It peaked at about around $84, and you can currently get it for $60. So that's quite a discount in my book. It is down by 20%. That's mainly due to the COVID crash. So nothing really to worry about except getting a 20% discount. So that's great. Now coming into its earnings, EPS is down by 18.3%, annualized 5-year growth rate. As you see, 2019-2020, we had a massive drop of 87%. I wouldn't really worry too much about this because, I mean, COVID, a lot of companies took a hard hit, so that's to be expected. Revenue has been going up by 1.7%, so that's great. As you can see, 2019-2020 took a big nosedive, and cash flow as well, massive nosedive, but we are still seeing it positive, and that's always good to see because it's not really a good thing for a company to be in debt. Now, last but pretty much least, we have 3M or MMM on the New York Stock Exchange. The exit date was August 21st, so you did miss it if you didn't buy it before then. It has an attractive dividend yield of 3.5% with a decent payout ratio of 71.37%. So great dividend wise, and it's been increasing its dividends for the past 61 years at 7.75% 3-year average annual dividend growth. So as I said, great dividend stock. However, when you look at the price, this is where it gets bad, and that's why I put it last, because I mean, it's not really great. All these other companies, they're about the same, no specific order, but this one is really my favorite of the top 5 dividend kings, but least favorite growth wise, because we are seeing since 2018 a massive dip. Right now it's currently at 165. 2018 we peaked at around about 250, 256, and it is still up 18.54%, but I mean, don't let that fool you. It's pretty much been just downwards from 2018, so I don't really expect it to recover over the past year. 3.56%. I mean, I wouldn't be worried too much about this. This is a great stock if you're just looking to have some passive income. That's why I'm buying the stock, is because this is a stock I'm just going to hold forever. I don't really care about whether the price goes up or down, because it's still going to be paying me dividends. Now, yes, they might lower, the dividends might be less and less money because the price is going to be down, but it's still a decent dividend stock. Now, getting into the earnings, the GAAP EPS is 0.9% up, annualized 5-year growth rate, so it's okay. It's not great, it's not bad, but it's definitely not great. So revenue up by 0.2%, so pretty good, better than negative, but cash flow is down by 0.7%. However, it's not negative, so that's always good to see. Anyways, I hope you guys liked this video. If you did, please subscribe down below. Leave a comment down below on what I can do better, but yeah, that's it. I have more videos on dividend stocks, and tomorrow I'm probably going to be releasing a video on NIO. Is it a good buy or not? I guess you'll have to find out.